Hey everyone, today we're going to be talking about the market panic that we're seeing here across the board in the indexes, which kind of stems from a particular problem being Silicon Valley Bank. And we're going to talk about what this means, what it means for the broader banking sector, and what it could possibly mean for our investments going forward. So if you're like me, you've probably never heard of this company before. It's a bank, as the name implies, it's Silicon Valley Bank in California, mainly catering to tech companies. But over the last couple of days, it's made headlines for all the wrong reasons. You can see here the stock, ticker symbol SIVB, was down over 60% today on massive fears that are emerging here that this bank could be on the verge of collapsing. Why? What's sparking this? Is it something that could have been prevented? What are the implications of this? These are questions that investors have right now, and there's not any clear answer on all of this, which is why we're seeing such broad market fear and sell-off happening across the board, really. Now, of course, this is going to warrant some fear because it reminds investors of 2008, 2009, when the whole financial system collapsed. And this may be the beginning of round two of that, right? That's, I'm sure, something that's going through a lot of investors' heads, especially ones that have been around since 2008. And this has led to like the VIX spiking, bank stocks being dumped. But it doesn't just stop there. We also seen tons of tech stocks being dumped, energy stocks. Pretty much across the board, we're seeing the market sell off here. And we've had a pretty quiet 2022 so far the last 2 months, but this could be the beginning of our next leg down. I'm not going to be here and try to predict what's going to happen next, but from what I see, the VIX spiking, fear, panic, all this kind of stuff, fundamental things happening with the banking sector, which is typically the backbone of the economy. Yeah, there's some cause for concern here. Okay, so let's talk about SVB here just for a few minutes to understand what's actually happening with this bank specifically. And really the bottom line is that this company was facing huge liquidity issues. Now, to combat this, they actually made a decision here to sell off $21 billion off its securities portfolio, which drove after-tax losses of $1.8 billion in the first quarter. And just for context, this is more than their net income was for the entire 2021. That is a huge hit. Investors in this company are obviously not happy about this. And this could be just the beginning of what's to come. Maybe there's going to be more losses in the future. And what's worse is that there may be actually other banks, hundreds of other banks out there that are facing the same issue here. They haven't publicly disclosed yet. But what's driving this? Why are banks kind of feeling this pressure right now? Aren't higher interest rates good for these banks? Well, the team at SVB here, they pretty much said that the expectations of continued higher interest rates, poor performance in the public and private markets, and elevated cash burn levels from their clients is what's hurting them right now and is making them make this drastic decision. In other words, they're getting hit from all sides. Higher interest rates are hurting them. Consumers not having enough money are hurting them. Markets suffering over the last year and a bit is hurting them. They just can't catch a break. Now, you're probably wondering, aren't higher interest rates good for these companies? Well, here's the thing. These guys had a pretty large bond portfolio from what I understand, and they locked in that bond yield essentially before all of these rise in rates. So not only were they yielding a very small amount on their bond portfolio, but bonds also dropped massively in value last year. So they're kind of feeling pressure from that, and they decided, okay, let's take a loss and kind of reset. That's kind of what happened here. The other fear, of course, is that, as inflation is still something that needs to be under control, rates are still expected to keep rising, job losses still continue across the board, especially with tech companies, which is what this company here, SVB, deals with specifically. You could see clients do some sort of bank run where they pull money out of the bank, and that could lead to liquidity issues for this company as well. So again, nothing that's happening today, but with a massive drop like we've seen today, investors are clearly trying to think ahead here and see what is the worst case scenario here. So that's kind of the SVB specific issue. The other question is, will this be an issue that other banks, especially the larger ones, also see? Well, XLF, the financial sector's ETF, had one of its worst days today. It's down over 4% on the day. And many of the large individual companies like JP Morgan Chase, Wells Fargo, Bank of America, these were all down around the same or more, like 4, 5, 6%. Now you have to also remember that financials make up a big chunk of the market over the S&P 500. They make up around like 11, 12% of the overall index. So when they hurt, they drag down a significant part of the market. And that sort of selling pressure spreads to other sectors like tech, which is a bigger part of the market. And because of the volatility nature of tech, it just drives things much lower and makes things much worse than what it initially started off as. You can see here on the bottom left of your screen the damage done to banks today with the financial sector. But if you look across the board, there's more red than green on here by a significant margin. You have Tesla that was down huge, Nvidia down huge, ServiceNow down huge. Most tech names across the board down pretty significantly today. They saw quite a bit of selling pressure. So, on this channel, I primarily invest in tech companies. That's the majority of my portfolio. That's kind of my circle of competence. So what does that mean for our investments going forward, especially for those of you that are like me, investing in tech and not really focused on financial stocks? Well, I want to preface this by saying it's not financial advice. It's just what I'm doing. I'm scouting out for deals. So I actually think that these banks here, like the big ones, JP Morgan, Wells Fargo, Citi, Bank of America, these large banks, I think will benefit from all of this. They've gone through really, really tough times, 2008, tougher regulations, rules that they have to follow. So I think they're going to weather through the storm, no problem. This could be a buying opportunity for them, in fact. And I think what could happen is these smaller banks could start to kind of collapse one by one, and customers start to move to these large institutions here as, maybe that's a safer place to be, a safe haven here when you still need services from a bank and you want to make sure that bank's around for the foreseeable future. So net, this could be a positive for the largest banks in America. And because of this, I don't think that we're really going to see the same sort of pressure that we did in 2008 when it comes to the financial sector and like a crisis of that magnitude. But it could still be a pretty significant issue if more banks like Silicon Valley Bank come out over the next, few weeks, few months and say they've been facing the same issue as well. Now, I suspect that there probably could be some more of this. We did see a crypto bank this week also announce some sort of very similar issues. They're kind of closing operations there. So there's definitely a lot going on behind the scenes, and higher interest rates are kind of the core reason behind all of this. So for me personally, my conviction names are tech companies, and I'm watching those super closely. There's a few that I want to add heavily to and build up to one of my top positions over the next few months, hopefully, if we continue to see sell-off. And you got to ask yourself, does it make sense for a company like ServiceNow that was down 4.13% today to be down more than a company like Citibank, which was down 4.1% today? One's a banking company, which is directly could be affected by all of this. One is a SaaS tech company that doesn't really get affected by this, yet it was still down. And at the end of the day, the answer, in my opinion, is no. It doesn't really make a whole lot of sense, which is why there's opportunity out there. There's likely going to be more turbulence out there, guys. Probably going to see a lot more selling here throughout 2023. Things started to look better at the beginning of this year, but now it's kind of turned around pretty quickly. But my focus really is on companies that continue to execute, that continue to beat on their revenue and EPS expectations, profitable, free cash flow positive, and they raise their guidance for next quarter or the full year as well. These are companies that, despite the macro, continue to execute, and ones that I want to hold, because when things do turn around, these will likely be the ones that recover the quickest and possibly make new highs the quickest as well. Now, I want to close off by saying the other thing to pay attention to is if you're well versed in financial stocks and you understand how to value these companies, how to look at these companies, read their financial statements and their reports, it may be an opportunity here to actually possibly invest in some of these, maybe not SVB directly, but other regional banks, smaller banks out there throughout the country that may have seen huge selling today as well on just broader market fear, right? Like this always happens. One company in the sector has an issue, everything sells off, and then eventually the market comes back to its senses. The irrationality goes away, and the ones that are still doing well but sold off bounce back, make new highs, and investors profit from that. So again, if you understand this sector well, in your circle of competence, could be a huge opportunity here to make some good upside profit in a fairly short period of time. To me, that's still fairly risky. I'll probably look through to see what opportunities are out there, but financials aren't really in my circle of competence, so I'm very hesitant on making any moves here. And as of right now, I haven't made any moves. Anyways, guys, hope this video was informative. If it was, let me know in the comments down below. Smash that like button as well. Thank you so much for watching, guys. Don't forget to invest positively, and I'll see you in the next one. Peace.